Okay, Sudarshan Sukhani is also back with us on the technicals along with Ambareesh Baliga of Edelweiss Securities. So we have a packed house. Gentlemen, afternoon to all of you and thanks for being with us on the show. We have about 10 more minutes, but it's proving to be quite a disappointing day. In fact, we will close at the lowest point of trade. Ambareesh, what's the sense you're getting? We got sales numbers that saw quite a contraction in margins, 7.6% versus 9% year on year. How did you react to that? And do you think this is a precursor to more disappointment in metal numbers from the likes of Tata Steel, etc.?
Disappointing, no doubt. But then again, when you're looking at a particular stock or a company, I think clearly you're looking at the future over the next couple of quarters. And like I've been saying earlier, clearly we see the cycle turning, and I think that should be shown in the future quarters, especially the March quarter. So I'm not so worried about metals as such, and any downside should be utilized to buy.
Sudarshan, hi, afternoon. What would be the trading orientation now going forward for positional traders? The Nifty at 6076.
Oh, good afternoon. No, the positional traders should be maintaining long positions. This is a correction. So if you are say here for the long haul, which means for 3 months or 6 months, then these corrections are an inevitable part of a trend. Short-term traders must have got out. We were giving a level of 61.70 for many days. That is the point at which we close all our long positions, and that's the point at which shorts are justified. So swing traders, day traders should be on the short side, trying to take long positions during day, not succeeding, but the short positions are making money. This is not a change of trend. It's a very normal phenomena. It's going to happen again and again.
Okay, it is good to hear that reassurance actually time and again, because everyone keeps asking each other the same question, whether this is the the uptrend getting arrested. But Sudarshan, I wanted your take on the real estate stocks. HDIL is now down almost 10%. So is the case with India Bulls, Unitech. Is it a good idea to, maybe not today, maybe tomorrow, day after, good idea to have a short position on any of these names?
Yeah, but we have to segregate real estate stocks in different areas. I mean, there are some stocks like India Bulls where you want to buy, not sell. So that's not a good idea to go short there. But others like Unitech and HDIL are short selling candidates. So in a choppy market, this is what happens. The sector gets split up. The strong ones still need to be bought into, and the weak ones should be sold.
Ambareesh, what are you advising to your clients after this kind of correction that we've seen? Do you think it's a good time to buy for those who would have missed the buzz?
Absolutely. Generally, when the markets move up, like what we had seen earlier, when the markets had gone to 6,300, people felt they were left out and they wanted to buy. But when you see a correction like this, people generally tend to stay out. But we're saying, surely this is the time to start buying, because the correction you're waiting for is happening right now. And don't expect the markets to go back to 5,500, 5,600 levels. Possibly, the downside would be about 6,000, 6,050. So surely this is the time to start buying.
What would you buy, Ambareesh?
In fact, we are looking at a couple of these mid-cap names like Bharat Forge and like ancillaries, Motherson Sumi, and then Dishman Pharma, where the results were extremely good. So these are a couple of stocks which you are picking up along with some private sector banks, the smaller ones.
Would you pick up Tata Steel before numbers?
Tata Steel, especially after sale, I think I'll just wait for the numbers to come out, and in case there is a disappointment, possibly I'll utilize that downside to buy, because we have already bought earlier at levels of closer to 250, 260 when I was recommending this stock.
Sudarshan, I take your point that we might still be in an uptrend, but this is a hypothetical question. If we have a 400, 500 point fall from here, in that case, would the Nifty have established a clear top at 6350 or so? This would be third time in 5 years that we would have gone there and not crossed that.
It may be, but it wouldn't change nothing. If the Nifty falls 500 points, I would say, what a wonderful buying opportunity. We have to understand that the market is consistently making higher lows. It's making a top every time at 6350, but the higher lows are giving a clear message. Once this top is breached, markets are going to fly.
Okay, so at least we have a consensus view. Both our experts believe that this is just a correction in an otherwise uptrending market. Ambareesh, you were talking about your picks from the broader markets and the ones that reported good earnings. But I wanted some stock ideas for a long duration investor who missed the bus in this move from 5,200 all the way to 6,300. What do you buy in the banking space now? Irrespective of whether the earnings were good, bad, ugly, if you believe that this market is in an uptrend, what banks would you buy?
Banks, again, the private sector ones, among the larger ones, clearly it's Axis, ICICI Bank, and HDFC Bank. These are the three larger ones which I'll buy. And among the smaller ones, it's DCB. And from a takeover point of view, clearly stocks like City Union and Karnataka Bank.
Okay, so those were a couple of banking stocks. Sudarshan, any calls that you would have in either of these spaces, in the capital goods space, because L&T has seen quite a bit of a fall in the last couple of days, and within the metal space itself?
No, I'm not upbeat on capital goods. So generally, I would suggest avoid the capital goods sector. And metals are also something that's likely to underperform. You know, these small rallies will keep on coming. So both the sectors are best avoided. So what should be entered into? IT, pharma, both have completed their correction, and banking, which is bottoming out. It's a matter of time before the banks start a big up move again.
So Darshan, you said, last time you told us 6170 was the level that you were looking at, and if it pierces that 6100, if it shouldn't recover before above 6100, what would you be looking at?
Oh, we are then looking at that round figure of 6000. This will keep on happening, Senthil. As the markets break a support level, we look at the next one. We are, short-term traders need to be short till the trend reversal takes place, but it will. My point really in emphasizing this is that this is a normal 200-300 point correction or 400 point correction after a 1300 point rally. We must see the context.
Ambareesh, Dr. Reddy's is almost at a new lifetime high again in a weak market. Would that give you comfort or would that worry you?
No, it will surely not worry me. Neither will I say that it's giving me a lot of comfort and that you should in fact go out and buy. In fact, at these levels, I won't recommend fresh buying. But again, a stock like Lupin or a Sun Pharma where we have higher amount of comfort, those are the stocks which you're picking up.
In the very near term, Ambareesh, how much do you think this markets could be dragged down because of the macro issues? The rupee has gone all the way to almost 63.50, it went to 63.40, and then we have some inflation data that's expected this week, and it's expected to be ugly. How much do you think it can pull back the market in the very near term?
In fact, see, we have already seen 5 days of fall, and because of which I don't see it continuing at least for the next 2 or 3 days. Maybe we could have a fall further for tomorrow. And post that, we should see some amount of bounce back. This is what history has shown us, that you normally don't have a 8 to 10 days sort of a fall. Because of which I feel that possibly 6,000, 6,050 should be a good sort of a support. Inflation data is going to be ugly. I think that's already discounted. Rupee has already fallen. That is discounted to a large extent. Unless, of course, we see levels of 64, 64.5, which I don't expect.
Ambareesh, one of the factors spooking the markets is the whole tapering talk coming up again. How much of this fall is because of that, and if we should get something definitive on that count, what do you expect?
No, to a certain extent, surely the fall is due to fear of tapering, but the way we see it is tapering, in case it happens, will happen sometime around February, March, by which time we will be in that election mode. And because of that, clearly you will have a fresh rally as far as elections are concerned. So I don't think tapering will have too much of an effect.
All right, let's take stock of the market's action now. We come to the end of trade. Anuj, your final comments on the index. It's been a weak day and another day running where we closed at the low point.
Sonia, and on Friday we were discussing, when stocks like Indiabulls Real Estate, HDIL, and all of us.
How you should be away from the mid-cap space.
For a bit, and that's how it panned out. Look at HDIL down 9% now, but we'll talk about that in a bit. First, let's talk about the large caps, and the Nifty is ending at day's low. The 6,070 was the low. You were ending at 6,080, so really it doesn't make too much difference, the 10 points. And what would be worrying traders is the way private sector banks panned out in second half of trade. Look at Axis Bank down about 4%. That stock is the weakest, was the first to break 200-day moving average and has been quite weak for some time now. IndusInd Bank is again approaching 400. It normally sees buying at 400, so will be interesting to see what happens there. L&T, now that really is crucial because that's been the leader of this market. Now 3% lower on L&T, so that's also down. Metal names have corrected. Hindalco, NMDC, both these stocks down. SBI ahead of its earnings. Both SBI and Bank of Baroda actually don't look good. The last set of PSU bank numbers have clearly disappointed the market and not looking good at all. Tata Motors also down about 2%, and on the way up you had some defenses like Dr. Reddy's doing well, and Lupin also was in the green. Tata Steel ahead of numbers also looking good, and Maruti up about 0.5%. But we had terrible breadth also in today's trade, Sonia.
Well, terrible, you know, Anuj, after a long time, Central, after a long time, we've seen the mid-caps actually marginally underperform the frontliners. I mean, last week the mid-caps had an outperformance, the week before that as well. So now mid-caps are starting to get into the game on the downside. So that's a bit disconcerting, and the market breadth has been sorely in favor of the declining side. That gives you an indication that the trading sentiment has been very sour today. Top of that list is real estate. So HDIL, you have the India Bull Real Estates of the world, Unitech, all down about 2 to 9%. And like you were pointing out, a lot of mid-cap banks had a disastrous showing this quarter. Top of mind is Central Bank. So that stock goes down about 5% or so. Okay, 3% after reporting a huge net loss. Dana Bank reported weak numbers this time around. Profits dropped by about 60% or so. United Bank had a very disappointing set of numbers. So all these banks, apart from that, infrastructure too lower. GMR Infra, a couple of others, you know, Reliance Power, Suzlon, etc., all on the lower side, and metals with SAIL reporting a crack in margins. SAIL goes home with a loss of 1.5%. Let's take a quick look at what was on the gaining side. Suven Life Sciences, the profits have actually increased sevenfold this time around, so 16% up move on that stock. Adani Enterprises, that one's just been rallying on volumes and on price. I have no reason for that, but Apollo Tyres, Aurobindo Pharma, some brokerage upgrades coming in on the target price, etc. So 3% up move, and Arvind has been rallying post its earnings, so another day in the green. But we come to the end of today's trade with a big disappointment on the market. It's been a close below 6100 and 6 straight days of a fall. Like we were mentioning, the fag end of the earnings season has been really disappointing. So let's listen into the central bank management highlighting what has been a very poor quarter for them.
The line of the bank has taken a major hit, basically on account of increased provisioning requirement. 2051 as against 971 in the Q1 of this year and 486 of Q2 of the last year. This increased provisioning requirement is basically in respect of non-performing assets. We have seen a slippage of almost 2,570 crores in this quarter, and the gross NP of the bank is today at 6.47%. Net NP of the bank is 3.77%. I would request my ED, he will just give you a detailed presentation on the results, and thereafter we'll take your questions.
I'm here to present the Q4 half-year results of bank. So the numbers are not very impressive. As I go through all slides, you will appreciate the reasons for the same. The total business for the bank has increased to 4,09,041 crore from 3,57,139 crore in September 2012, recording a year-on-year growth of 14.53%. CASA increased by 11.04% to rupees 74,597 crores in Q2 financial year 2013 from 67,180 crores in Q2 of 2012-13. Total deposits grew by 13.20% on year-on-year basis to 2,30,413 crores from rupees 2,03,538 crores in September 2012, whereas the core deposits grew by 19.99% on year-on-year basis. Gross advances stood at rupees 1,78,628 crore against 1,53,601 crore in previous quarter 2 financial year 2012-13, registering a year-on-year growth of 16.29%. Total income increased by 9.79% to 6,237 crore in Q2 financial year 13-14 from 5,681 crores in Q2 of 2012-13. CRAR under Basel II is at 11.41% with Tier 1 at 8.17%, whereas CRAR under Basel III is 10.15% with Tier 1 at 6.52%. Now, coming to the performance highlights of September 2013, the Q2 shows the total business of 4,09,041 crores. The total deposits, out of which is 2,30,413, of which the core deposit is 1,79,606, of which high cost deposit is 50,807%, which is 22.05%. As you could appreciate that constantly we are trying to bring the high cost deposits. The loan advances stood at 1,78,628 crores, investment at 75,231 with a healthy CD ratio of 77.53%. Now coming to the income, the Q2 showed the income of 6,237 crores, whereas half year it takes to 12,680. The gross expenses stood at 5,695 crores with an operating profit of 542, and if you talk of half year it comes to 1,542. Unfortunately, the net profit is not there. It is showing a net loss in Q2 as 1,509, and it takes a half year at 1,487 because previous quarter onwards we are feeling the little bit of pressure on the NPA provisioning. Last quarter profit was only 22, so that takes care of that makes the net loss at 1,487. The net interest margin stood at 2.45%, and if we talk of half year it is at 2.58%. Now we have 4,407 branches, out of which rural is at 1,627, semi-urban at 1.
For the year 2012. In India, the growth in the crude diesel production for the year 2012 was 5.6%, and for the current year from January to September the growth is 3%. However, the things have picked up in China. The growth which are 2.1% during the last year, it has in the range of 8% during the current year from January to September 2013. Now about the growth in the demand of steel in India. For the current financial year, April to October 2013, the production level has gone up by 5.4%. This year it is 46.8 million ton compared to a level of 44.4 million ton for the corresponding period last year. This is April to October 2013. As India as a whole, the crude steel production. Imports have been 3.3 million ton against 4.4 million ton for the corresponding period last year, that is April to October 2013, and thus the imports have reduced by about 24%. Exports, it has been 2.75 million ton against 2.84 million ton for the corresponding period last year, that is April to October 2013, and thus exports have remained almost the same level, but there is a marginal reduction in the exports by 3.3%, and thus the real consumption of steel in India has been 42.5 million ton from April to October 2013 against 42.2 million ton for the corresponding period last year, and thus the growth in the consumption of steel in India is roughly about 1%. The price levels have remained the same both in the overseas markets and in the international market. Last about 1 month there is no change. The capacity utilization of steel in the global markets remained at about 78 to 79%, and thus there is a 20% surplus capacity available in the system. Now coming back to the results announced by our company, I am very happy to announce that the saleable steel production during this quarter is 3.26 million ton against 3.18 million ton, and thus there is a growth of 3% compared to the corresponding period last year in saleable steel production. Sales in tonnage, it has been 3.02 million ton during this quarter against 2.62 million ton for the corresponding period last year. Thus the growth in sales in tonnage has been 15%. Sales turnover in rupees crore, it has been 12,802 crore during this quarter against 11,976 crore for the corresponding period last year. Thus the growth in sales turnover has been 7% in spite of the fact that sales realization per ton declined by about 7% during the second quarter compared to the corresponding period last year. Profit after tax, it has been 1,180 crore during this quarter against 543 crore during corresponding period last year, and the growth in profit after tax has been 117%. Hence, coming to the modernization expansion, for which there have been a lot of interest among the various stakeholders. You know that the SAIL had taken up a massive expansion modernization program at a cost of about 72,000 crore. Till October 2013, orders worth 59,000 crores had been placed, and the total expenditure incurred till October 2013 is 49,500 crore. During the last financial year, we had commissioned projects worth 5,500 crore year as a whole. During the first half of the current fiscal year, we have commenced a project worth 4,300 crore, and during the current financial year as a whole, we expect the projects worth 15,000 crore will go on stream for the year as a whole. You are aware that 4,060 cubic meter blast furnace which has come up and operationalized in Rourkela. It is the largest operating blast furnace in the country, and this was a part of our ongoing modernization and expansion scheme. With this, I will invite any questions from the media.
Sir, there has been a 117% growth in the profit after tax. Your sales net realizations are down 6%. Your sales turnover has gone up by just 7%. Can you talk about how come this 117% growth in profit after tax? Is there a forex item? Is there an other income component here?
See that there have been pluses, there have been minuses also. One of the reason of the increase in our profits was lesser cost of the coal. If you see the price of the imported prime hard coking coal, which was $220 per ton, is on a FOB basis during the last quarter, second quarter of the last year. This second quarter, the price of the prime hard imported coal was $135 per ton. So there was a saving on this account, 885 crore to the company.
So that's the key highlights from SAIL. Just to change track, our correspondent Gopika Gopkubar was lucky enough to ambush the RBI Deputy Governor Urjit Patel outside the RBI, as you can see. She's just streaming in what she has caught on tape. So let's hear her out.
Well, thank you, Dr. Patel, for speaking to CNBC TV 18. To begin with, the trade deficit numbers have come today at $10.5 billion. How do you see these numbers, and what's the trend going forward? Do you see this getting worse?
I think the trade numbers today have been excellent. Frankly, they are as good as they can over the last 4 months. We have had export growth that is in double digits, and in October it was 13.5%. Imports are in negative territory. The trade deficit for this October is half of what it was last October, which is the comparison we need to make because there is seasonality involved. So while the deficit is higher than in September, that's not the correct comparison. And having a deficit is 50% of what it was last year for the same month, I think bodes very well for the trade deficit and the current account deficit. And in fact, is the most important fundamental factor that should impact the rupee. If you recall, just few months back, this was described as a structural problem for the rupee, and I think we can lay that to bed, that in part because of what we have done, in part because the global trade has picked up, or at least global GDP has picked up. Our exports are doing very well. The imports have come under control, and we are looking at a current account deficit in the range of $50 to $60 billion, which compares with 88 billion last year. And if you look at the April to October trade deficit, it's running at $12 billion lower than last year. So this is very much in the realm of possibility that the current account deficit may come down to 3% of GDP, and it is easily financeable. Our ECB's numbers are higher than last year. Our FCNR deposit numbers are higher than last year. The FDI is about the same as last year. So on the financing side, it looks to be something that we can manage quite easily. And we have $281.2 billion in reserves, which is a substantial firewall. We have now collected $17.5 billion through the two swap windows, the banking capital and the FCNRB. Therefore, in terms of the fundamentals that should determine the rupee, we are in extremely good territory at the moment. And even over the last 10 weeks, net FII investment is positive in 9 of those 10 weeks. So even there, the story has changed. Therefore, apart from 1 or 2 small numbers here and there, almost every part of the balance of payments is showing a substantial turnaround. And therefore, you know, today's trade numbers are just the cherry on the cake. They're extremely good. And I think it bodes very well for the fundamental value of the rupee.
Okay, before I leave you, I just wanted to ask, so therefore, do you see the need for shoring up more forex reserves going forward, or do you think we are well prepared for tapering if it has to begin early?
I think we are extremely well prepared. We have $281.2 billion in reserves. The 2 windows that we had opened up, the FCNRB and banking capital, do have a guillotine date of the end of this month. So I think we will stick to that. But we are well prepared for the taper.
Thank you so much for talking to us.
Thank you very much. Bye.
That's it from the RBI. That's back to you.
Okay, so RBI is sounding pretty confident over there that the trade deficit, the current account deficit should be between 50 and 60 billion. I think no matter how you do the arithmetic, it will have to be 50 billion or 55 billion. It can't be, there are a lot of people out there who believe it could even be south of 50 billion, but RBI working with that number and confident that ECB and other flows itself are enough to finance this. To be fair, the dollar did get cheaper after this number came in, though there have been other pressures against it. Actually, we have been able to get somebody from the market to react to what Dr. Patel has been saying. Ashish Parshati, the head treasurer at HDFC Bank, is joining us. Ashish, did you hear what Urjit Patel had to say? And do you think that now the rupee should find some bit of a support, or do you think it is still gullible and vulnerable to global forces?
So I think, I heard the deputy governor, and I'm quite in agreement with his views. I think there's been a significant improvement on the current account front as well as on the balance of payments. But the value of the rupee obviously will be subject to sentiments in the global market. Whenever you have this thing of early tapering coming in, it will definitely impact emerging market currencies like the rupee. But the extent of depreciation or pressure we've seen in the past, I don't think we are likely to see that again.
Okay. In spite of it, the rupee did not respond much. I mean, the dollar got a little cheaper after the trade deficit number, but not much.
So yes, I think at this point in time, the external sentiment is much stronger. And this is obviously an historical number. The cash flow impact of it has already been priced in the exchange rate. However, given what is being forecast, I think fundamentally rupee now is in a much better position than what it was a few months back.
Okay, Ashish, since we have you with us, what's the sense you are getting on the bond markets after touching 9.13? Of course, now we are below 9%. What's the near-term range likely to be? And what caused this recovery? We didn't hear any OMO announcement after all.
Well, I think if you see post policy, 10-year was around 8.5, and it went all the way to 9, 10, 9, 15, 60, 65 basis points. Obviously, there will be a pullback if there's such a sharp move over a short period of time. But I think it is more likely to be, around the 9% level.
Even without an OMO?
Even without an OMO, I would say, depending on, pressures, that if there's no OMO at all, I think you will see higher yields at every auction. However, if there is an OMO in the interim, it will always be a pullback. But every auction will definitely cause the yields to move up.
All right, Ashish, we'll leave it at that. Thank you very much.
All right. Well, the market today closed with 62 points cut on the Nifty, and the mid-cap index also closed with 1% losses. But one stock which has been in focus is Tata Motors, and that's because robust JLR sales have helped Tata Motors offset its India weakness. Is the stock a good buy at this price? That's our closing bell money control question of the day. We'll get you some of the most interesting views after this break.